McCrispy strips are now at McDonald's. I hope you're ready for the most dippable chicken in McDonald's history. Dip it in all the sauces. Dip it in that hot sauce in your bag. Dip it in your McFlurry. Your dip is your business. McCrispy strips at McDonald's.
Reality radio for a really great future. We're talking real money.
Well, we may not be getting very many callers at 855-935-TALK, 855-935-8255 on this Memorial Day weekend, but we are doing a fine job of ticking off those that we do have listening and calling in.
Oh, we got somebody angry at us, do we?
Oh, my gosh.
Boy.
And it's about a thing you would have never expected.
Oh, okay. It wasn't
so
the
I thought this was
money
fascinating.
teacher? Yeah. Okay.
No. This was about my mention of the fact that I don't spend cash. I hate spending. You don't wait. You don't spend cash.
It too. No, I don't. Well, okay,
matter of fact,
but
I don't know
none.
very many people who do. And I even checked with our board engineer, and he said, I'm a very, very, very middle-class person, and I never use cash. He got furious because it is un-American to say that we don't use cash. It's un-American. So I mentioned that if he calls again, please. I love it when people disagree with me in really silly ways.
Well, that is true.
I do. I'm a 40-year talk show host.
You should have been a litigator or something instead.
I am what I should have been. I just should have been a more political talk show host. That's what I should have been.
You can still do that. It's not over. You can still do that.
It's not over. Really?
It's not over.
You're actually calling this not over?
Well, I didn't say the show wasn't over.
No. I'm talking about life. It's like feeling near the end. It's feeling closer.
Didn't Colonel Sanders start Kentucky Fried Chicken at like 60-something? He was old.
Dude, I'm close to 70 something. So
well, then
I'm beyond
then start
Colonel
a prime rib
Sanders.
place instead.
I'm past it all. Anyway, give us a call as we talk real money here on Talking Real Money. 855-935-TALK is our phone number. 855-935-8255. And in our previous hour or previous podcast or some other podcast, we talked about bad places to get advice, like a lot of the radio shows out there. Where do you go to get your financial advice? If you want to call us and tell us, we'd love to hear. 855-935-TALK. But it appears that you don't necessarily get it from very good places.
No, Gallup is out with a new survey. Remember when they were a big deal? They used to be the pollsters, right?
Well,
Gallup,
that's back when we had horses, and there was a lot more galloping going on. But then we got cars, and it's more like...
This show is a slow trot. It is not a Gallup, okay, my friend? According to Gallup, they just did a poll of 2,000 adults this April, and they claim that 43% of you say that you get your advice when it comes to finances from friends and family, which is a show that I really enjoy. Ham is very good. I mean, John Hamm's a great actor. It's a good program, but I wouldn't be going there for...
Isn't that your friends and neighbors?
Okay, that's a bad joke. Okay, Friends and Family.
Which, by the way, is a very good show.
No, is it Friends and Family?
Your Friends and Neighbors.
Now you're making me look.
Your Friends and Neighbors. Yeah. And it's John Hamm, who's terrific.
Yeah, he's very good. He is really good. Okay, so that's 43%. Mm-hmm. Financial advisors and planners get 41%.
Wait, they're number two, the people who actually know what they're doing? Or, wait, I got to rephrase that. The people who might actually know what they're doing?
It gets worse. Here's the part that actually troubles me a bit more. That a third of the people surveyed say they get their information from financial websites.
Like Talking Real Money?
Well, okay, but we don't have very much advice on our website.
No, we really don't. What kind of advice websites are?
I'm thinking like Market Watch.
Oh,
CNBC,
Market Watch, Motley Fool.
Stuff like that.
We got a Motley Fool story to do later at some point.
Yeah, I mean, that's no. Then number 4 is 32% saying financial institutions such as banks and credit unions. That's even worse. Wow. That's not a place to get help. With 20%, podcasts and webinars, social media gets 20%.
There are some podcasts that make
yes, there
sense,
are.
like
books get 20%.
Financial physics.
TV and radio programs about financial matters get 20%. So we do a podcast and a radio show. Does that make us like 40%?
Hold on
20
a minute.
plus 20?
Your number adds up to far more than 100. You said 40.
You're right.
40% from friends and family.
Hey, I didn't do this. This is maybe why Gallup's not as big a deal as they used to be.
40% from advisors.
That's a good point.
20% from podcasts.
Forget I even brought this
How
up,
can
okay?
this
It's a holiday. Okay, and I don't use cash money either, so call me about that. I'm not doing particularly well.
I got to...
I'm just reading the numbers.
I trusted you. I trusted you to bet those
We look
numbers.
bad, really bad.
We can't do math. Be back.
Tom and Don are talking real money.
You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Your guides to a really great financial future. Tom and Don are talking real money.
You want me to set the record straight on this, try to fix this or not?
Okay, can you fix it?
Well, I don't know. Okay, so reading
Did you
the poll.
reread the article?
Reading the poll, it says respondents were asked whether they use each of the 10 financial information and advice sources.
So
it's
we
not
have a multiplier.
100. Yeah, correct. So 85% said yes, they do use at least one of the 10.
Okay.
15% said they don't use any.
Again, give me the 10. Just give me the 10. I want the 10.
The top 10?
The top 10? Yeah, 10 are.
Okay. Friends and family.
Friends
and you're
and
right.
family.
The John Hamm show is friends and neighbors.
Okay,
so
friends
I
and
had that
family.
wrong already.
Mm-hmm.
Yeah. Number 2, financial advisors and planners.
Okay, good. Financial advisors and planners.
Number 3, financial websites.
Okay, websites. Got it. Okay.
Yep.
I'm actually making a list. Yeah.
Number 4, I don't need to say financial anymore. I'll just say institutions. You know, like
institutions,
banks,
like
credit
hospitals.
Yep.
Oh,
Crazy
banks.
place.
Banks.
Yeah. Number 5 would be podcasts, webinars.
Podcasts and webinars?
They put them together.
They do not go together, Gallup. Okay. All right. Podcasts,
Okay.
webinars.
Number 6, social media.
Oh, what a terrible place to get advice.
And we know, because we've read this previously, that people under the age of 25, that's the primary
Worst.
place they get their
It's
information.
The single worst.
Yeah, it literally is. Books come in next,
Books, okay.
depending on what you read. TV and radio programs about financial matters,
TV, radio.
which I've been
That's
a host
us.
of both.
Yeah, you have.
I think that's 1, 2, 3, 4, 5, 6, 7, 8. Is that 9? 3.
Again, the math still
6,
doesn't work.
9. So the next one is financial advice program sponsored by your workplace. That's 9. And then number 10 is government consumer
Yeah,
financial
apparently
resources.
the government's not giving very good advice.
No,
so,
they don't get
so,
they don't get much attention.
So those were in order of popularity.
Correct. Yes,
Okay.
those were. Now, okay, I got to say that was if you took in the entire population. If you break it down by age, the way they did, different segments, do different. Of course, our age
younger
group uses
people are big
more.
on social media,
right? Well, we use people. We want to talk to actual persons.
So we're
there's a
talking
difference
to our
there.
friends and family and financial advisors.
Bingo. Yeah, right.
Okay.
Young people are going to be social media, podcasts, that kind of thing. So,
And we probably go to the stupid banks. And by the way, can I just tell you that of all of those, the one that probably gives consistently the worst advice across the board are banks.
yeah, banks are horrible.
Because in friends and family, you're going to occasionally get good advice.
You might strike lucky.
Yeah, like
Yep.
a dad who's really invested or a mom who's really invested or a grandparent or something. The web, there's some very good advice on the web. There is. There's some very good advice. There's some very awful advice. There's both.
Yep.
Banks, though, they're always going to try and sell you something. I mean, I think there are 1 or 2 instances of a fiduciary in a bank, but they're rare.
Very rare.
Podcasts, you can get good advice. You can get it. You just have to be discerning. Social media, yeah, you can get it, but it's hard to find.
Not much. Okay.
Well, okay, we're on social media.
Are we?
What you call YouTube?
Well, we don't do much on YouTube.
I
We don't have very
didn't
many
say
people
we do
following.
a lot.
But we are there, is what you're saying.
And we're in books, so there's lots of good advice in books. TV and radio?
Okay, I don't know why people said books, because people do not read books anymore. I'm sorry.
Well,
Very
okay.
few.
I read the e-version
okay.
of them.
No, I'm not. I'm talking in just, book or whatever it is. But
That's
okay,
true.
Fair enough. Yeah.
All right.
Fair enough.
Well, the government and financial
I don't know
advice
what,
at work.
what government consumer advice is provided?
FINRA has
no
tons.
one.
FINRA has
people don't
tons.
even know how to find that.
I'm
That's
just
a silly
saying.
thing.
I'm just saying it has advice. SEC does have some information. You can find it. It's hard to find.
But it's not educational.
So what's your bottom line on all of this stuff there, dude?
Okay, first of all, friends and family is, even if you think the people are smart and you know nothing, no way. Absolutely, I'd rule that out.
Across the board.
Because the risk is too high. I mean, you could get
wait a minute.
Totally misled.
If you're going to say the risk is too high, then eliminate all of them.
Well, you could get bad advice from each one of them. You're right.
From each one of them.
Yeah.
You could
Well,
get
that's
terrible.
true.
Think about financial advisors.
Oh, yeah,
think
for
about
sure.
Think about the fact that Morningstar in 2015, not Morningstar, MarketWatch in 2015 did the numbers and found that 1% of financial advisors, people who provide financial advice for money, brokers or insurance agents or 1% are always acting as a fiduciary.
It's the same percentage as the people that got hit by shots in the Revolutionary War. 100 bullets. They weren't bullets. What are the
musket balls? Musket balls.
And you got one hit. One hit out of 100. That was the
because they didn't know how to rifle barrels yet.
I'm just thinking that's funny.
Rifling barrels was not a technology.
Yeah, was not apparently. So at any rate, no. So you're right. You could get burned in all those places. I mean, the thing when you start mixing friends and family is affinity could be a real issue because you're more likely to believe them than you would be a book or a magazine. I'm
gonna once again play. Wait, wrong one. I didn't want to play music. I'm going to play.
Give me a
Devil's advocate.
Please.
And say that I really believe that you're as likely to get terrible advice.
But no, what I'm saying is you're more likely to believe it if it's your friend and family than you would be just from random website.
That part I get, but I'm just saying,
affinity is affinity.
I think getting great financial advice is one of the biggest problems we have. I think it may be one of the biggest problems in the country because it's so important that people get good advice or they're not going to enjoy a good future.
Couldn't agree more.
I hate this.
No,
terrible.
And so this poll is actually pretty indicative of the overall problem. It's scattered, it's random, and as you said, you could get bad advice from any place, any of those.
And the fact is, if you find a place that gives good advice, don't keep it to yourself. Tell people, and then when they do a show on Saturdays, call them at 855-935.
Okay, it's Saturday. It's the nicest day of the year here too. By the way, I should have mentioned that.
You know, let me just hold on a minute. Let me check the lines and see if we've got anybody.
What? It's crickets?
Yeah, there's nobody on the line. Okay, never mind.
Still, shh.
No. Oh, yeah, no, nobody's there. I thought somebody called in.
No, not happening.
855-935.
I like your sound effects. Can you do the klaxon horn or something to wake people up?
Hold on. Checking. I can do this one. Ready? This fits the show, though.
Should I pick my phone out of my ears? Out of the... Dun, 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 money. Yeah, that's good.
All right. Did you have anything you wanted to
more bad advice. I could provide that if you like, because this is one of the 20 percenters,
okay,
the
wait,
radio
I'm actually going to check.
TV program.
Now, by the way, Brad called, who had a pretty interesting, broad kind of political financial question.
Yeah.
And he hung up right before we came out of the traffic break.
Which is what? What was it?
It was about. I'm not going to tell you because I wouldn't know. It's Brad's question. I think he has exclusive rights to it. So I don't want to violate his copyright. I'm all about.
You are about that. I'll give you that. Well, because you're a creator, you want to protect.
You've got to be very careful about this stuff.
Especially today, it's so easy to steal.
Yeah. As a matter of fact, I had an idea, and you know me and ideas. I have like one every other day. I had an idea.
Oh no, I'd say more than one a day.
I had an idea for a new podcast, but to really make it work, it required the use of some recorded music. Like music that's like ASCAP BMI stuff.
Yep.
And I checked, and there is no way to do a podcast with copyrighted music unless you buy the rights to each individual track.
Wow.
Tom and Don are talking real money.
At Capella University, you can learn at your own pace with our FlexPath learning format. Take 1 or 2 courses at a time and complete as many as you can in a 12-week billing session. With FlexPath, you can even finish the bachelor's degree you started in 22 months for $20,000. A different future is closer than you think with Capella University. Learn more at capella.edu. Fastest 25% of students. Cost varies by pace, transfer credits, and other factors. Fees apply.
For your real life and real future, Tom and Don are talking real money.
By the way, if you hadn't noticed, this is the first show in which I've used my new toy, the Rodecaster Pro II, to do a show because I need to get used to it because we're going to start taking callers on a live show during the week in the not too distant future whenever Tom eventually gets back from vacation.
Yeah, I'm going to take a break from one of those vacations so I can do the show
this summer. Well, probably not this summer, so it could be.
I don't know. There's a lot going on this summer. Yeah, so it'll be a while. So
he's busy.
That's going to be cool, though. So we're going to do a podcast like a radio show in a way.
We're going to do it like a radio show. But I have this amazing ability on there with all these pads now to do things, effects and sounds. So if you have any sound effects that you think would really work well in the show, go to talkingrealmoney.com and send in your requests for sound effects you think I should put in case I need them. Because I got like 100 places to put sound effects.
All right, quit ignoring Brad. He's been waiting forever, and
Brad's back?
Brad's back.
We're so glad you're back.
Yeah.
Welcome
Brad,
to Talking Real Money.
Yeah.
No.
He got mad again and hung up on you.
No.
Sorry about that, Brad. Well, I have another question if you want.
No. Seriously?
Crushing, is it?
This is not my weekend.
No, it isn't.
I'm going to spend my holiday weekend. I'm going back to bed, crawling under the covers, turning on some music, and I'm not coming out until Tuesday.
I wonder who would really complain if you did
not
that.
A soul. not a soul.
Number.
No, no one would. Okay, my wife might when it's time for dinner.
Yes, she would.
Because I cook.
That's true. She'd look around and go, what are we doing
Where's my
here?
dinner?
Yeah. So
my dinner's in bed still? I can't eat dog food.
All right. So do you want me to read this question?
Yes, read the question.
Okay. Comes to us from Renton, Washington. Selena writes, I'm turning 60 this year.
Congrats.
I'm unsure of my retirement year. Should I choose the 2030 or 2035 target date fund for my 401k?
Good question.
That's one of the better questions in a long time, actually.
Considering we haven't had any this episode, really.
That doesn't take much is what you're saying.
Well, it's the best question of the episode.
Okay.
All right.
So 20, but let's look at the two funds because that's an interesting discussion to have about what's in each one of them. They will be slightly different, but not dramatically, I'd say.
Right.
So.
The 2030 has a portfolio that is, drum roll, please. I don't have a drum roll. That's what I need. I need a drum roll.
You do need a drum roll.
Gosh, I need a drum roll. It is about 60-40.
60% in stocks, the riskier things, 40% in bonds, the should be more stable things.
And so we need 2035.
Yeah.
And
so that's a 60-40 with a 2030.
Huh?
Right? Is that what you said? The 2030 is a 60-40.
The 2030 is a 60-40. So my guess is this one will be a 55. No. Oh, what?
2035 should be riskier.
Oh, yeah, right. 2035 is riskier.
Yeah.
It's a 70-30.
Yeah.
Yeah.
Okay.
70-30.
70% stock.
So, okay, that makes sense.
Okay, so but going back, here's what I would do instead of just saying which one's right for me. I would go take the risk quiz, number one.
Ooh, that's a good thing. It's at talkingrealmoney.com, by the way.
And it's free.
And that what is that place again?
What is it?
TalkingRealMoney.com.
That
there we go.
Is really loud.
Is that one loud?
Yeah, it doesn't sound the best. Okay, anyway, so that's one. Number two is, here's the thing, Selena. Your risk capacity, risk tolerance, all those things should be dependent on how much risk you need to take Because if you have a plan that says I only need to make 5% a year, why would you put more in stocks than you need to? That would be a bigger decision, right? So that would be part two of the whole
what
thing.
You need to determine is what we like to call your risk profile.
Correct.
Which is a combination of your need to take risk and your capacity for taking risk. And that's where the risk quiz comes in. It's really, really good. There are actually some academically researched questions that are pretty good at telling you what kind of risk taker you are with money.
Yeah, I think that people have a tendency to either take more risk than they need or less. They don't know, and then they make a mistake. So my answer to you would be to do those two things. Determine what rate of return you need on your money. Determine what rate of return how much volatility you emotionally can accept.
And then the risk quiz will actually even give you a number, too, telling you whether you should be about 70-30 or 60-40. So you'll have a really good idea. 855-935-TALK is our very lonely phone number, so please give it a call.
Tom and Don are talking real money.
Brace the rudders! Raise the sails! Raise the sails!
Captain, an unidentified ship is approaching. Over.
Roger. Wait, is that an enterprise sales solution?
Reach sales professionals, not professional sailors. With LinkedIn ads, you can target the right people by industry, job title, and more. We'll even give you a $100 credit on your next campaign. Get started today at linkedin.com/results. Terms and conditions apply.
Reality radio for a really great future. We're talking real money.
Okay, no more tip. We're going to go right to the phones right now. We're going to go to Brad.
Brad's back?
Brad's back.
Wow,
Hi,
Brad. You're persistent.
Hey, I'm sorry about this. My phone went dead, etc.
I thought it was all our fault. I was blaming us.
I was blaming us. I was starting to look like a lot
no.
of my relationships where they're kind of there, but not so much. So thanks for calling
Like
back.
his ex-wife.
Yeah. There you go. My question is really, if political news obviously affects markets, etc. I'm like 2/3 in real estate, personal and rental, but 1/3 in Russell. We've talked about Russell before, and I've been very happy with them.
Mm-hmm.
Most of 70-30, bulk and 60-40. However, with this recent news that China's citizens apparently are under an emergency evacuation from Israel, and the implication is there might be a conflict brewing between Iran and Israel. Therefore, how would that affect the markets, et cetera? And basically, my question would be, should I take money out of like my 60-40 and buy gold or something like that?
That's an easy answer.
I didn't react. I didn't react to the tariff question or problem. I wrote it out, and I'm back just fine. But this kind of has got to kind of pique my interest.
Well, there's precedent. There's some very powerful precedent. If you remember back to 2001, remember what happened in 2001? Remember
that 9/11?
That plane,
9/11,
that horrible plane thing?
Yeah.
We were on a war footing. We were talking about, we were going to war. Everybody
went to war.
But at the time, we were getting ready to go, and the markets freaked out. And almost to the minute the invasion started, the markets recovered.
Okay.
Remember, bad news gets built in. It gets cooked in. So if you know about it, the markets have already factored it into the current pricing.
Yeah, and let's go back to what you suggested as the alternative. That would be gold, is what you said. Now, gold has had a very good run for the last year or so.
For that reason, in part.
Exactly, yeah, for the sort of uncertainty of the economy, equities, et cetera. But over the long haul, again, remember what we're looking for is long haul. Gold has not had anywhere compared to the returns of either stocks or bonds, for that matter.
Mm-hmm. I was thinking short term. As far as I wouldn't.
But then you'd have to get in, you'd have to get out, you'd have to figure all that out. That's
and then you're stuck with that dilemma that we had in 2001, where everybody was getting out because we knew we were going to war. And so people a lot of people said, well, I'm going to wait until we find out how the war is going to go. Didn't take that long. At the day it happened, the stock market soared.
Yeah, and we don't actually know what's going to happen. That's the other thing.
No,
so
we
why
do
bet on
not.
an uncertainty?
Yep.
It's one thing we've learned, certainly been reapplied this year.
Bear in mind that you've got a whole lot of your money in an asset that even though it might fluctuate a lot, you can't see that it's fluctuating. That's that real estate.
Yeah. Well, you can. You can go to Zillow every morning and see what Zillow says.
But you're not going to know anything from that.
No, not until somebody comes along and writes the check for it.
Yep.
Yes, that's true.
As Tom can attest.
Correct.
Yeah, several times.
Okay.
So,
well, thank you so much, you guys. I enjoy listening to you.
You're
Thanks,
very welcome.
Brad.
Thank you very much for the call, finally.
That's a really...
Okay.
Thanks, Brad.
Have a good Memorial Day weekend.
Yeah.
Have a good Memorial Day weekend.
Yeah, I mean, this is... Okay, a couple things I think to unpack from this. Number one, we all read things and think because of X, Y is going to occur, right? That this will happen. So therefore I need to do something.
Right.
As you pointed out, Don, if you know that, if you've read that and that's your intuition or your educated belief as a result of that, you're not the only one. Right. There are a lot of other people, and there's people that spend a whole lot of money and a whole lot of time figuring that out. So they've traded well ahead of you, right? Number two is you can read it in 100 places. The number of people that are successful as what we would call would be a market timer. There aren't any. People just can't get in, get out at the right time. So instead, it makes sense to have the right asset allocation, know that good times and bad times are coming, and you're going to have to weather them. That's it.
Exactly. Major world events are never a surprise. They're not. Not at least not for very long. You know, if we got 9/11 was a surprise.
Yep.
But that surprise wore off very quickly, and the market adjusted
Indeed.
to that situation.
Yeah, exactly.
Markets adjust. They don't take surprises well, but the problem with a surprise is its definition. It's a surprise. You're not going to know it. 855-935-TALK is our phone number. And look, there's somebody else on the phone. Hey, we're doing well.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Wow, we actually have plural calls.
No.
Plural, 2.
Okay.
They called, you know what number they called?
What?
855-935-TALK.
So it still works.
855-935-8255.
I thought you'd quit paying for it or something.
I guess I paid the bill on time.
Okay,
let's go to
do it.
Lacey, Washington. Mike, welcome to Talking Real Money.
Good afternoon. Thank you for being on Memorial Day weekend. I'd like to talk about the cash comment you made earlier. I believe that not spending cash has a direct impact on prices of goods and services. Let me explain.
Please.
If I go into a store and I do my shopping and I see ketchup for $4.50, which is recent, I'm not worried about that, because what I'm going to do is I'm going to pay for those products with my credit card. And so I'm not going to manage the price of the goods and services based on the actual price. I'm going to manage to the end of the month as to what my credit card bill is going to be. As a result of that, I think probably the retail people understand this, especially people like Mickey D's. It's hard to figure out what the price is, but everybody's putting it on a debit or, more importantly, a credit card, and nobody cares really about the functional price of that particular item.
So you're saying it doesn't feel real? Is that what you're saying?
It isn't real.
Well, no, it is real because you're actually going to pay for it from your resources, but it doesn't feel real. So you're saying because it doesn't feel real, it doesn't have the same psychological impact on our decision making.
You're saying it better than I am. You're absolutely right, because I interviewed 3 people the other day, younger people, and I asked them if they could raise $30 cash between the 3 of them. They couldn't do it. Which means,
which
I don't know what I got. I got to check right now.
Which goes to my point of not using cash. But here's my problem. My wife makes me use cash.
I have $14 in my wallet. Okay, but we do know one thing. This is a reasonable point, but I don't. Anyway, so here's one thing we do know. When people use their cards, and more of them are doing that only, they do spend more.
Yeah, they do spend
There's
more.
no question. There's no question about that. So if there's an elasticity of the price there that, what you're saying, Mike, might not exist if you had to pull it out of your wallet. I don't argue with that.
But we're not going to change it.
In real life,
no.
In real life, I have to pay the bill at the end of the month, and that bill will probably grow. And if you look at the credit card debt in this country now, I believe we're at record levels.
It's bad right now. There's no doubt. Yep, for a variety of reasons. Again, I don't know, but I think what you're saying is that's not real. We could get into an argument what's real, what's not real, because at some point the bill does get paid, but at the moment it doesn't feel as real because you're not pulling it out of your pocket. I wouldn't argue with that.
Exactly.
Yeah, but the
Exactly.
reality is what the reality is, and my prediction is that we'll continue to see far less use of cash. It will continue to plunge, and in the not too distant future, we will actually see the elimination of credit cards, individual cards, credit cards. You won't see the end of the accounts, but the accounts will all be digitized. They'll be paid based on some other system. And it's there's always a downside to everything, but the fact that that we don't like it doesn't mean a darn thing. It is what it is. Thanks for the call, Mike. We really appreciate it.
Just had somebody in the office the other day lamenting the fact that a major custodian wants to charge you for getting your statements mailed to you. Well, that's kind of where we are today. So
that's the world. Thank you, Mike. Jason left. Jason, you can still call us. We have time. 855-935.
Wasn't that Jason?
Wasn't that Jason? I checked my wallet. You see, now this
how much you have?
This is a leftover from my wife giving me cash regularly. She gives
your wife gives you money?
She gives me cash because she has
I knew cash. I liked Debbie.
She has a cash stash, and she goes, I need to spend some of my cash stash. So she gives me money. What do you mean?
My wife does not give me money.
I'm the one who's earning it.
No offense, I love my wife.
Really,
exactly.
It's just a roundabout way of getting it back to me.
Okay.
But you're going to find this shocking, and I know why she did this because we were on the trip. I have $473 in my wallet.
In your wallet?
Yeah.
We're going out tonight,
$473.
Woo!
I don't know where all that came from, but it's just been adding up, apparently, as she hands me money.
$473.
Yeah.
I have not had $500. Actually, that raises an interesting point. I mean, as you know, I'm getting ready to go to Europe. The question is,
should I have my cash? No.
Should I take cash money with me?
No, you shouldn't take cash money to Europe because everything is Apple Pay, Google Pay, credit card pay. Jason's back?
Jason's back.
Jason's back.
Jason's back. Jason, welcome to Talking Real Money.
Thank you.
Hey, good afternoon.
Hey, what's up?
Doing?
Oh, I'm doing okay. So my question was, I own my own business. I'm a mobile mechanic, and I don't really know what to do for retirement. I have a Roth IRA that I go through. I have in the small town that I live in, I have a financial planner that helps me with that stuff, and so it's in a Charles Schwab thing, and he says you can put this much in, max it out, and I have that. And prior to starting my business, I worked in the machinist union, and I am vested in that union, but I only had like 15 years in it, so I don't know, what my retirement will be. So I guess my question is I just don't really know if I'm doing the smartest thing with my money. There was only 1 year that I made enough money with my business that the CPA said that you might want to look at getting into a SEP IRA. The past couple of years I didn't make that much, so it wasn't really an issue. So I don't really know what to do or how to invest. So I'm going to stop talking now.
No, that's good stuff.
Good, yeah. And by the way, I just want to say, your advisor uses Schwab? I got a really high voice there. Schwab.
You did.
Your advisor. Yeah, I can't believe.
Okay, but wait. Let's just talk about an advisor first of all. How much money total do you have saved? Total.
Are you talking in
anything? In anything. Not your business, but just all your liquid
IRAs,
holdings,
your brokerage account, anything you put money into and have been saving.
Yeah, how much total?
I don't, maybe 40, 50 grand.
Okay. Part one is you do not need a financial advisor because you're probably paying somebody for things you do not need.
Yep.
That's
okay.
Silly. Part two is, if your income, are you married or single?
I'm married.
Okay. If your income is household wise is, I think, like $240,000 a year or less, you should do a Roth IRA for each you and your wife.
Yes.
That's easy.
Okay.
No brainer.
We did just start. Yeah,
okay.
We did just start the Roth for her the beginning of this year. So.
And that's with Schwab?
Yes, and it wasn't with them. They changed over a couple of years ago, so I didn't really see any difference. But I guess
what
are
your
investments?
What are your investments in that portfolio?
Well, so here's where I'm going to look pretty ignorant because I honestly don't know. Like that's kind of where I look at when I pay somebody to do something, then I expect them to do it.
All right, well, hang on with me just a minute. We got to take a quick break, really quick break. And then I want to come back and tell you some of the stuff you're going to need to do.
Tom and Don are talking real money.
This episode is brought to you by Amazon Business. How can you free up your team from time-consuming office tasks? Amazon Business empowers leaders to not only streamline purchasing, but better support their teams so they can focus on strategy and growth. Free up your teams and focus on your future. Learn more about the technology, insights, and support available at amazonbusiness.com.
For your real life and real future, Tom and Don are talking real money.
We're sneaking up on the end of our time, but we're talking with Jason, and Jason is a mobile mechanic. He's saved about $40,000 to $50,000 in his various accounts. He and his wife now both have Roth IRAs. They're with Schwab. You have an advisor. You don't know what you're invested in. First thing you got to do, Jason, get a copy of your statement.
Yeah, you got to know what you're doing there. I mean, and yes, you're right. You're paying somebody else to do it. I don't think you need to. Here's what I think you need to do. Each Roth IRA could be in a one exchange-traded fund portfolio. That could be an AVGE or DFAW. These are globally diversified portfolio.
But maybe he has those already. That's why you got it.
Okay.
You got, no matter how good your professional is. It's like when you do a job for somebody, if they don't get an estimate in advance and a receipt after, they're not doing their job. You're not doing your job. You have no receipts. You need to know what's in that portfolio right now, and then we can make some minor tweaks. The other thing you need to find out, ask your advisor, what in the heck am I paying you? How much am I paying you for your work?
I don't think you need one at this level. No, I think you get a couple of funds. And back to the other part of you. So I want to just make sure we're clear on a couple of things. The Roth for each one of you. But then if you did have additional money, I'm with your accountant. I think a SEP IRA would be a great choice for you to do some additional. SEP probably better. But anyway, but some additional savings for a business owner, I think that makes total sense. Sure.
Do those and then call us back and we'll help you make this happen, okay?
Oh, Don, you're out making the offer. Get your statements and call us. We'll walk through what you own. Sure, why not? We'll do that. Not right this minute, obviously, but at some point.
But we're out of time now, but we want to help you.
Yeah, I know. All right, well, I appreciate it. I know that they do send me a statement every quarter. It just goes in a file, and I never really look at it. Because I just want to make sure, it looks like I made,
You made what? What does it say what you have?
All right.
Do you have one there? Did you get one?
No, I'm not. I'm not looking at it. I'm driving right now.
Oh,
but
don't do that. Don't do that.
When I look at it, I usually
call us when you
make
have
a
it.
little bit of money, and okay, I will do that.
All right, sir. Drive safe. Take good care of those customers, and thank you so much for listening to the program. And we
thank you for calling.
And we want to help you. And by the way, if you can't call the show for whatever reason, or you think, oh, I don't want to get on the show, we have these advisors that work with us that are really good people, and we have a philosophy that very few other firms have. We believe everybody must get help. Whether they pay
help anybody.
us for it or not,
Bingo.
you must get help. Now, we will not manage your entire life's money forever for free. That would be stupid. But we do help, and we want to help everyone have a better future. So go to TalkingRealMoney.com. If you don't want to call us, you can send in a question there or click on Meet an Advisor, and you can meet with one of our advisors, like Tom.
You get the help one-on-one that you need. We review your portfolio. We talk about your planning, all that kind of good stuff. And we do that, frankly, every day with any person who calls us. So it sounds like a pitch, but it really isn't. So
there's no high-pressure sales pitch.
Feel better already. Thank you for that.
Me too.
Talking Real Money.
No, we're not done yet.
.com. Oh, I can't tell. I don't have the clock in front of me.
No, we're not done yet.
Well, when I heard that voice, I thought they were giving us the boot. So.
No. 15. We're going to get out of here in a minute, but you can ask questions, meet with an advisor, learn all kinds of stuff. Just go to TalkingRealMoney.com. That's TalkingRealMoney.com. And remember, almost every single weekday we are here
Talking Real Money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. Is anybody still listening?